Hey guys, welcome back to my channel Accounts Accuracy, and let's see how we can calculate cash flow from operating activities all together in just one sum. Here you can see this is the sum number 17 which is given in the cash flow statement chapter of T.S.Gerewal's book. Now in this sum you can see here surplus of two different years, that is 2020 and 2021 is provided. So that is why we will find out these two amounts, that is from 7 lakh we will deduct 4,50,000 and the difference will be considered as the profit during the year. So first of all what we will do, we will calculate net profit before tax, because this is the first step of calculating cash flow from operating activities. You must watch my previous videos too to understand it better. Now, as I had told you that this net profit before tax we calculate in working note. That is why first of all we will calculate working note and we will calculate net profit before tax simply by adding the reserve and provision and dividend to net profit of the current year. As I told you, the difference would come out from 7 lakh, we will deduct 4,50,000, we will get 2,50,000. So that 2,50,000 will be the net profit of the current year, and in that we will add this item, that is transferred to general reserve. This item value is given 2 lakh, so this 2 lakh will be added to it, and then we have another item provided in the question, that is provision for tax. We can see here the provision for tax. This is also provided with the value 1,50,000. So these two items are only required to be added to the surplus value, that is profit for the current year, in order to get net profit before tax. So as we are going to add three amounts, 2,50,000, 2 lakh and 1,50,000, we will get 6 lakh. So what we have done in the first step, we have just added the reserve as well as provision for tax to the surplus value 2,50,000, and now our net profit is 6 lakh. Next to that we have in the question depreciation, amortization of goodwill and loss on sale of machine. You can see these three items are the non-cash items as well as non-operating profit. Now, as per the second step, after calculating net profit in the working note, we will jot down the value of net profit before tax here. Then our second step will start, in which we will do the adjustments of non-cash items and non-operating items. And in the question, we are only provided with the three items which are required to be added over here as non-cash and non-operating item, that is depreciation, goodwill, amortization and loss on sale of fixed assets. Because in the question, we are only provided with the three items of non-cash and non-operating items. So all these three items, amortization of goodwill, loss on sale of machine and depreciation values, we will copy down in the format of cash flow statement, that is 2,50,000, 80,000 and 2,50,000. So when we will place the items in the inner column of amount, we will get the total of it as 5,80,000. After adding the three items, we are getting 5,80,000, which will be added to 6 lakh. Now, after adding 5,80,000 to 6 lakh net profit value, we will get 11,80,000, which will be the operating profit before working capital changes, as we don't have any income item in the sum. As we do not have any non-operating incomes item, so we can't deduct anything. We will just proceed to the third step. In the third step, what we do? We just add the decrease in current asset and increase in current liability, and we deduct increase in current asset and decrease in current liability values. Now, if the items of current assets are decreasing, we will just add it, and if the items of current liability will be increasing in the question, we will add that, and vice versa we do for the increase in current asset and decrease in current liability. If current assets increases, deduct, and if current liabilities decreases, we deduct. So here in the question we can see that there is a decrease in debtors, and also prepaid expenses of two different years are provided, which is also decreasing, because in the previous year the prepaid expenses was 30,000, whereas in the current year it has become 10,000. So from 30,000, when 10,000 will be deducted, it will come out 20,000. There is decrease in 20,000 amount of prepaid expenses. So the two items, that is debtors as well as prepaid expenses, are current assets which are decreasing. It needs to be added. Here we will add the two items of decrease in current asset, that is trade receivable and prepaid expenses, 1,28,000 and 20,000. Then we have another item of current liability which is increasing, that is outstanding expenses, because in the previous year 2020 it is 40,000 and in current year it is 55,000. So from 40,000 it has increased to 55,000. There is increase in 15,000 in outstanding expenses, which is current liability. So it needs to be added. So the total of 1,28,000, 20,000 and 15,000 will come out 1,63,000. Now this 1,63,000 will be added to 11,80,000. Now from these two totals we will deduct the value of increase in current asset and current liability. In the question we have only been provided with the two items, that is current investment and trade payables. You can see here increase in current investment, that is current asset is increasing, and the another item, that is trade payables, that is decrease in trade payables. So these two items, 1,50,000 and 47,000, should be deducted, because current investment is current asset which is increasing, whereas trade payables, that is current liability which is decreasing. So these two should be deducted and the total of these two will come out as 1,97,000. So after deducting from the total of 11,80,000 and 1,63,000, this value 1,97,000, we will get 11,46,000. Now at last we are only left with the income tax paid value, that is 3,50,000. We have already used all these amounts, but this 3,50,000 hasn't been used. This needs to be deducted as per the format. At last we deduct the value of income tax paid, that is 3,50,000. So when we will deduct income tax paid value, our cash from operating activities will come out as 7,96,000, because from the total cash generated from operations 1,46,000, we will deduct income tax value at last, and our cash flow from operating activities will be 7,96,000. So this is how we calculate cash flow from operating activities, and all the three steps I have discussed here in detail. So if you have not understood, you may watch the video again in order to understand it better. And I hope this will be beneficial for you. Please don't forget to subscribe my channel and hit the big fat like button, because it motivates me to make some more videos for you. Thanks for watching.